In today's presentation, I'm going to go over student loan payments and what are your options. The Biden administration just recently extended the pause in student loan payments through January 31st, 2022. A lot of people think that, oh, January 31st, that's a long time away. I don't have to think about repayment right now. I don't have to think about my student loans right now. But actually, that time's going to go by pretty quick. So today, what I would like to discuss are what your different deferment and forbearance options are and your different repayment options. For deferment and forbearance, I'm just going to go into the basics about what the key difference between deferment and forbearance is. And I'll also give you a link so that way if you want to find out more about the different deferment types that are available, you can. For the different repayment options, I'll go into a little further detail for that. Because if you can afford to pay, you might as well pay because your student loans aren't going to go away unless you apply for student loan forgiveness or eventually somebody in the government decides to forgive the loans, but they've been saying that for years, so it doesn't look like it's happening anytime soon. So today I would like to just go over what your options are. And if you do want to find out about the different student loan forgiveness programs that are currently available, I will put a link to that below this presentation so that way you can find out more. So like if you're a nurse or teacher, working in public service, there are options available. And if you could just watch that presentation to find out more if you're interested in that. What is the difference between deferment and forbearance? There are two key differences between a deferment and forbearance. The first key difference is that you will not be charged interest on the subsidized portion of your student loans during the qualifying deferment period. Loans in forbearance will accrue interest during the forbearance time, regardless of loan type. Not all loan types are subsidized, and I will cover that during another presentation. The second key difference is that some forbearances must be granted by your loan servicer if you are eligible, which is called a mandatory forbearance. Others are offered only at the discretion of your loan servicer, which is called a discretionary forbearance. For the discretionary forbearance, that means the servicer is not required to grant you a forbearance. Also, each servicer may have their own limitations of how much forbearance time they want to grant to each borrower over the life of their loan. If you want to find out more information about deferments and forbearance, I will put a link below that will give you more detailed information about all the different deferment types that are available. The most commonly used repayment plans are the Standard Repayment Plan, Graduated Repayment Plan, Extended Repayment Plan, Revised Pay-as-you-earn Repayment Plan, Pay-as-you-earn Repayment Plan, Income-based Repayment Plan, Income Contingent Repayment Plan, and Income Sensitive Repayment Plan. Now I would like to provide you with a short definition of the different repayment plans. The Standard Repayment Plan, all borrowers are eligible for this plan. Payments are a fixed amount that it ensures that your loans will be paid in full within 10 years. 10 to 30 years for consolidation loans. Usually the minimum monthly payment for this plan is $50 per month. The Graduated Repayment Plan, payments are lower at first and then increase, usually every 2 years, and for an amount that will ensure that your loans are still paid within the 10-year period. 10 to 30 years for consolidation loans. Extended Repayment Plan, if you're a direct borrower, you must have more than $30,000 in outstanding direct loans. Payments may be fixed or graduated and will ensure that your loans will be paid off within 25 years. Income-driven repayment options. Under an income-driven plan, your payment is a percentage of your discretionary income. The percentage is different depending on the plan. The Revised Pay-as-you-earn Repayment Plan, repayee, generally is 10% of your discretionary income. and each direct loan borrower with an eligible loan type may choose this plan. Pay-as-you-earn plan, payee, generally is 10% of your discretionary income, but never more than 10-year standard repayment plan. You must be a new borrower as of 10/1 of 2007 and have received a disbursement of a direct loan on or after 10/1 of 2011. The income-based repayment plan is 15% of your discretionary income if your loan was taken out prior to 7/1/2014. Post 7/1/2014, it is 10% of your discretionary income. Income-driven repayment options continued. Income contingent repayment plan. Monthly payment will be the lesser of 20% of your discretionary income or the amount you would pay on a repayment plan with a fixed payment over 12 years, adjusted according to your income. The income-sensitive plan is only available for FFELP student loan borrowers, which are not eligible for PSLF, which is a type of forgiveness program. Your monthly payment is based upon your annual income, but your loan will be paid in full within 15 years. Not all deferment and repayment options were covered during this presentation. Your student loan servicer will be able to let you know which deferment and repayment options you may be eligible for based upon the eligibility criteria they have received from the Department of Education. Not every loan type is eligible for every deferment and/or repayment option or program. Please remember your student loan servicer is not your enemy, but will call you if you fall behind on your payments. Their goal is to educate you on your deferment, forbearance, and repayment options to help you prevent defaulting on your loans. I hope that you found this presentation useful, and if you can like and subscribe to my page, I would appreciate it. I have listed links below for more information if you want to find out about different deferment options, student loan forgiveness, different repayment options in terms of like the income-based repayment. If you want to know more about that, there's links listed below. Thank you and have a very blessed day. Until next time, thank you.